Welcome, everybody. This is the Day Trading Options Daily Review for July 5th, 2016. I'm Scott. He's Alan. We're going to be doing it a little bit differently this time, and we're going to be talking about just some overall, one overall concept, and that's what I call the dead no man's zone. And Alan has a nicer name for it, but it's kind of like, if the stock's in this area, there's probably a really good reason why the indicator is don't trade it. And as you can see, it's flashing there. That nice little orange is what I call the no man's zone. And so the rule is very simple. You don't go there. If the stock is there, don't go. If it drops below, then there might be potential for a put. And if it goes above, as you can see at the end of the day when the green's going, there might be an opportunity to go up. And the one comment before I let Alan jump in here is if you've been watching this from 9:30 in the morning till like 3:30 and it's done absolutely nothing and then it starts to take off, what are the chances that that's another head fake and it's actually just goes up a little bit, you jump in, and then it goes back the other way? It's like 50-50 or 60-40, or it's like not very good odds, right? And there's always a degree of chance in all the trades and different things. That could be news that was leaked late in the day and it caused it to run up or whatever. But there are good trades, there are bad trades, and what we want to encourage you to do is go with the good trades, because if you're always going with the good trade and you're following the rules tightly, you're going to minimize your losses, you're going to do well on your wins, and you're going to feel good about yourself. But if you see a little bit earlier in the day, there was a couple downward trends while it was in the no man's zone, and those were great head fakes. Like, oh yeah, this is looking good, okay, I'm going to get in it, and then it's like goes the other way, and those are brutal. So this is a little bit about just that, and we're going to take a look at some other trades the same day that you would have been far better off looking at. So welcome to the show, Alan.
Thank you. And yeah, the name I call it is the risk zone.
The risk zone, right?
Yeah, no man's is quite fine too. Whatever people like, because it is about us as we're individuals trading most of the time. Some people trade as partnership, and that's a good thing for some people, and other people don't want to do that. But mostly we have to. Everything we have to adapt for ourselves. So one of the things that we've been telling people from long ago, as Scott says, is we tell people, which is why this thing's here, and it has been thoroughly tested, is you don't want to be trading inside this, and this range moves, right? It adjusts itself. And so at this point, this would have been a good trade. Yeah, it's too late in the day to get in for most of us. But that's the only time that was a good trade, and maybe here, and I say maybe. But yeah, this was not a good trade. We have people that, because they've been trading for a while, this is the mindset side. They ignore the rules because it's like, oh, well, that, I'm here to make money, and I found a trade, and so they get in here because they go, or here because they go, it is going down. It's like, really? How do you know that? Well, I had a red candle here and a red candle there, and and then they get in here anticipating it's going to go like this. And because actually in this case, SA, which is one of our target prices, is down here, and wow, I could make all that money. Well, reality is actually that this person that got in there lost money. Not a lot, but they lost money, and it's a good thing they didn't hang in till all the way here. Probably the mag line here, that thing there told them you really should be getting out. Anyways, yeah, so as you said, Scott, that was not a good trade. Now, you were asking me before we got started, were there any other trades? And it's like, well, when you've got 30 good stocks that the computer auto tracks for you, and you can add your own favorites, it's like, well, here by distinction is a stock that did fit the rules. And clearly, how did it fit the rules? Well, it broke the risk zone right there. And then it kept going. And then, yeah, you get the white background, you lost the pink tint for the K band, the move's over, and I'm sure you would have made some money there. You go,
And you'll
well,
notice too, like you said, the
mhm,
risk zone adapts. This thing dropped down. The risk zone is totally different now than it was at the beginning of the day.
mhm.
And, uh, and it's kind of comforting being below the risk zone, right?
Yeah, and that's the whole point is you for one, you don't trade heading this way to the risk zone, although some people do. Uh, do that after you've got the bread and butter strategy. Like, please just make money, and then you want to do some cool stuff, because there's one of our coaches. He's awesome. He's been doing this for years though, so he knows that, oh yeah, got some money there, and he'll look at that and go, nah, I don't think so. But he'll see some other move where it's shooting up from here, and he might buy it right there, and he'll sell it there because he's seen it 1,000 times, and he knows what he's doing. And he goes, well, if it doesn't quite make it, I'll get out there. And those are his extra trades.
Yeah. And Alan, you make a really good point there too, because a lot of people will follow one or two or three stocks very, very closely.
Mm-hmm.
And I remember 5 years ago, everyone was always talking about Goldman Sachs, because it would just always make these moves that if you got in at the right time, you made profit. And you got in going up, got in going down, didn't matter. It was moving just perfectly. And then we talk less about it today. But if you've been watching the same stock for a year, you get to the point where you're very familiar with it, and you can see, oh yeah, it's doing its little head shake that it always does, or it's doing its little up down thing that it always does. Like, they're like people, and you just know this one likes mocha cappuccinos in the morning, and this one likes hot chocolate, and this one has tea, and they act the same way all the time.
Yes.
And it's really very funny to watch.
And you can, by the way, so if you have a favorite stock, for example, I was just going to think, well, do I have Microsoft in this list? And there it is. So if you want to add it to the replay, you can do that. And there is Microsoft. And for years, now this is just, a bunch of days in recent time, but for years, as you're saying, Microsoft was in a channel in the $30-odd range. It was just sideways. It didn't do anything more than that. And then all of a sudden it started to break out, which was a clue. But yeah, so you can, and I know a fellow who he would do the swing trading, which we don't recommend on stocks. You can do it on other things, but not mostly stocks. He got to know the dance. So he got really good at the dance with that one stock.
Yeah.
So, by the way, if one of your favorite stocks was, well, gee, you told me about Baidu and it did well, and what if one of your favorite stocks was Hewlett-Packard and you had that on the list? I think you could have made money with the same rules.
Right. Let's, why don't we move back to around 950 and just go forward to where it broke out the risk zone, out of the risk zone, and just so we can show everybody this is what you would have made if you just followed these simple rules. Breaks out of the risk zone, it's red, the K-band is good, the stock market is heading down.
Things looking good. You might not like that because lately it's been green, but let's just say you just, for simplicity, you went with this. So here we are, 1, 2, 3, 4. So that's 4 minutes, 7%, 5, 6, 7,
13%,
8, 9, 10. So you're 10 minutes,
21%.
And of course, at 10 o'clock, sometimes there's a turn, but we'll just, you're deep in profit. You can, hey, we'll just see what happens. 11, 12, 13, 14, 15, 16, 17, 18. So you can see how it had the flutter and then kept going. Anyways, we'll just let the, I'm not going to count for you guys here. I'm sure you can just do that yourself. But let's just say it, you see 10:30 is another one of those where things often turn. You're at 50%, which is usually are you kidding? I'm getting paid.
You won the lottery.
Yeah, because what happens is it starts pulling back and you start giving away the money instead of getting paid. So, you want to see how much it goes? Well, it does keep going, but I wouldn't be hanging around for that. So 80%. If you want that 80%, that's very rare. It does happen, but it's certainly not a common thing. And how long did it take you, let's say, just to get the 50? Well, let's go more rational here. So let's say you got out at 10:30 because that was, and that's 10:30 there. So 35%. That's
Nice.
really awesome. Now, if you go look at the Baidu trade, and we're going to go back to where we got the clue, which would have been right there, actually right here. It broke the risk zone. It's not the best trading time, but you know, Baidu's showing some strength. But we're just going to say, let's say we got that. And how did it do? Well, it's fluttering a bit. You see, this is what happens. You start giving up some of your profit. Well, you're still at 20%. You're crossing the mag line. Do you want to get paid or do you want to risk it? That's up to you. I like getting paid. Oh, but you left money on the table. Yeah, but other times I'm putting money in my pocket that I gave up.
And we always like to quote that guy that made so much money, Warren Buffett. And when they asked him, how did you make so much money in the stock market? He said, I got in too late and I got out too soon.
Yeah, because it's not about, you know, getting greed. You'll never maximize the dollar. Sometimes you get lucky and you do. But so, yeah, here it's coming and going and coming and going. And, you know, that's just a rough way to trade. It's so nice to trade where you just get paid, bang, you're gone, and then you just do the same thing again tomorrow. So like here, you can tell it's already showing weakness. Well, just
get out.
Isn't 26%, you know, worth the average stock investing?
And that's so 20 minutes.
Yeah, 20 minutes versus 3 years. Just give me the money. So this is what the whole point of the replay is that you learn what your comfort level is. And well, I'm sure I'll hang around all day. Well, that's fine. That's up to you. And then you can also, like some people do, is they get into trades that, you know, aren't the best. And then you're supposed to figure out in replay that, well, you know, that I really shouldn't have gotten in there. For example, on this one, you know, I'm sort of just touching the risk zone. So, you know, maybe. But
trying to escape. Do I actually get out?
Yeah. So here, you know, this one fellow got in here. You know, I don't have K-band color. Well, now I do in a small candle. But I should probably not be trading this thing this way. Well, let's just see what happens here.
It's looking good. It's looking good. Come on, baby. Come on.
Come on, baby.
This is a horse race.
So it's you got a Y point. Things are bad. It never really broke the risk zone. It played touch and bounce right here. That's what happened. It touched it and ran away. And as some of the people that have been using the system for a while, they noticed that these lines here are really good support and resistance, which means if you can break it, not touch it, break it, then you probably have a move. So this idea of bouncing around inside, you know, the pinball is that's not the trade. The trade is breaking it. Well, what does it do? Inside, inside, inside. It's just, see, like there, it teased you again by just touching it and comes out again. Oh, well, yeah, here, now. Well, you know, touched it and came back out. It's like, no, that is not the trade.
And the scary part is when it finally does break out, which way? The other way.
Yeah, so yeah, end of the day, you know, there is this, which was a nice long run, but then this one here, the question is, what would you have gotten into that one? Why and why not? And that's, you know, what was it about this trade, other than it's pretty late in the day, that wasn't good? Well, the market is not so good. That's what that cloudy thing is. It's like, this is not a good time to trade. It's not the best times. And you've got low volume. That's what these other markers are. If you hover over them in your computer, it'll tell you what they are. But anyways.
And generally speaking, this stock has been going up. So it's been fighting going down the whole day.
Yeah, this is not the ideal trade. As one of the coaches teaches, is you want to be at the edge of a trend on a daily basis. Well, this is nowhere near it. See where you are today? That's yesterday's candle. This is today's. That's the previous day. Well, you maybe had a trend here, but it started a day here and started fighting. Well, why do you want to be in a fight?
That's right. We're all
I
about
don't.
peace.
If there's trouble, just, hey, it's not for me. Thanks so much for the offer, but I think I'm just going to go do something else. So here's the daily for that. It's like it's hitting a top on the daily. So each one of these candles is a day. So anyways, that's it for me for this day.
Can you just quickly show how much we would have made if we'd kept those 2 trades?
Sure. So here are the 2 that we did like. 35% and 25%. And, you know, you might have only gotten 10 or 15% out of there if you left right away, which is fine. But that's the whole idea, is getting paid. It's not about grinding every dollar. It's about avoiding bad trades like here, where you get sucked in and then it's like, darn, I'm in it. What do I do? Well, next time it gets close, you get out.
That's right. Awesome. Thank you very much for that, Alan. Some really good information and lots of wisdom in the day trading options daily review for July 5th, 2016. Thanks for joining us, everybody. Make sure you click the little subscribe button in the bottom right-hand corner of your screen and leave comments and share this video with all of your friends. We're here to show you that it's possible to make 10% in 10 minutes or less. In this case, we kind of broke our own rules and went 25 and 35 in a little bit more than 10 minutes. But we really wanted to spend this particular episode talking about the risk zone, the no man's land, the area where you do not trade. Just put that up in big, bold letters on your wall, and you're going to save yourself a lot of grief long term. I mean, yes, you could get in and you just hit it right and you make your 10% when you're in the risk zone. No one's saying you can't do it. We're just saying it's not a good idea to do it.